Hey, what's up folks? Welcome back to the channel. So now that we're in a new year, it's important to set goals and resolutions for the new year. And the start of a new year is really a time to reflect and think about what we want to accomplish, what we want to achieve in the new year. So if you think about it, in a lot of ways, fitness is the same, whether it's physical or financial. A lot of the same concepts apply. Whether you want to be physically fit and go for a run, a waterfront run, or invest. And a lot of times the trickiest part is getting started. A lot of times people will ask, well, how do I start? I don't exercise physically or financially. I'm not really doing anything. Well, I'll cover all of those today from a financial standpoint. But the concept of fitness overall is, the trickiest part is getting started. So in 2022, if you've never invested before, you may ask, what's the best way to start? What are the best funds to get into? Well, starting out, if you've never invested at all, the first thing you need to do is open an account with a brokerage platform, either E-Trade, Ameritrade, Robinhood, there's Schwab, there's many of them. And going back to 2019, I believe Schwab was the first one that eliminated all fees for brokerage. So that's really been a game changer. And the idea behind eliminating fees was that the fees were prohibitively costly for people that didn't have as much money. Because in the past, a trade, and this when I started investing, actually, going back to 2014 and earlier than that, a trade could cost up to $10. Even before then, a trade could cost up to $20, like in the 90s. And there was a time that you had to put a trade in over the phone. Well, thankfully, those days are all over. And now it's all free. But the idea was that it prohibitively hurt the poor. Because people who are poorer only have so much money to invest. And say they're able to buy one share of a stock and they have to pay some kind of a fee, then that fee could actually eat up the whole rate of return. So that was the concept behind not charging a fee. And really, I think it was a great thing that they did. I think it's been a game changer for the markets and for investing as a whole. So with that being said, what you want to do, you want to open one of those and you want to have a little bit of money to put into that account, maybe $100, maybe $1,000 or more or less. But like I say, the hardest part is getting started and overcoming obstacles and getting out of other people's way. So what you want to do, so start that. And if you have no experience investing in the new year, this is a great time to start. Even though, as you know from some of my other videos, the Fed is actually going to start tapering, which means they're going to slow their bond buying program and do that in order to curb inflation, or attempt to. They're going to try to start to raise interest rates through their open market mechanisms and hopefully curb inflation, which, as we know, was rampant in 2021. So with that, we could see slower growth in the market than we've seen in the past couple of years, but investing for the long term is always a great idea. It's always important to have a long-term mindset. So what you would do, if you're not well-versed at all in picking stocks or picking any kinds of ETFs or trading options or NFTs or cryptos, you could just start by, say, putting $1,000 or more or less into a total market return fund. There are some good ones out there that Fidelity has. There's one called FZROX, which is called the Fidelity Zero Total Market Fund. And I recommend that one. Well, again, this isn't a recommendation because remember, this is not financial advice. But that is a fund that could be considered because it's cheaper than some of the other total market return funds. So the idea, instead of holding your money in savings, which if you caught from my last video, it's one of the worst things you can do, especially with inflation being rampant, you want to put, say, $1,000 or even $100, or like I say, more or less, into a total market fund. Because if you look at just what the S&P 500 did last year, it did about 28%. And the year before, it did over 20%. And it's been averaging well over 20% the last few years, just off the top of my head. Same thing with the NASDAQ and the Dow. All of the major indexes, even the Russell 2000, have been doing very well. So the thing is, investing, especially in the last 10 years, with all the stimulus that's been pumped into the economy and all the debt-financed economic growth that the Fed has done, it's been a great time to invest. And like Warren Buffett says, you always want to invest for the long term. So in the new year, financial fitness and maybe even physical fitness, but the concept of fitness as a whole should be really a key resolution, in my opinion. I mean, do what you want to do, but it's just my suggestion. And you want to start out with something like that, like a total market fund, not any savings accounts or checking accounts or money markets, because those all, as you saw in my last video, you end up losing money with those. So with that being said, again, Happy New Year, and thank you for tuning in. Please remember to like, comment, and subscribe, and I'm going to try to put out at least 2 videos per week this year. We'll see how that goes, but I'm thinking minimum 1, maybe 2 per week if scheduling permits. So thank you so much, and Happy New Year again. Take care.